Hi, Scott Irvin here, owner of Scott Irvin Associates. Thank you for visiting my video blog. In today's video segment, I'm going to talk about capital gains tax. It's one of the number one questions I get asked a lot of times by sellers, what type of taxes they're going to have to pay when they sell their home. And I want to start out this segment by telling you that I'm not an accountant, and for any tax matters, you should consult your accountant to find out exactly how it affects your specific situation. But a general rule of thumb is that capital gains, and capital gains is the amount of money or the equity in your home is the difference between the purchase price and what you're selling the home for. So for example, if you purchase a house for $250,000 and you sell it for $500,000, the easy capital gains tax there is $250,000. Now, the one thing you can do to reduce your capital gains and the money that you're going to pay on that equity or that difference is by keeping track of what we call your cost basis. And for example, again, if you buy a house for $250,000, if you put $50,000 in improvements in that house, your cost basis then goes to $300,000, what we call an adjusted cost basis. So now if you're selling it for $500,000, the difference between those two, or the capital gain, would be $200,000. Now, when you sell a home, if you're married, you're exempt up to $500,000 if you meet some criteria. And the number one criteria is that your primary residence, it's your primary residence, and you lived in the home at least 2 out of the last 5 years. If you're a single individual, it's the same thing, that you lived in that home 2 out of the last 5 years, and you're exempt for $250,000 in capital gains. And married couple, that doubles, it's $500,000. So in the example I just gave you, for example, if you sold your home for $500,000 and your adjusted cost basis was $300,000, that $200,000 difference there, or the capital gain, you'd be exempt from taxes from paying that. Now, the caveat to that also is that you can't have done this within the last 2 years. And there's exceptions to that. For example, if you have a job transfer, you can get an exemption. So you lived in the house for a year, and maybe the year prior you sold a house and you took a capital gains exemption, you could get another exemption for that. I know this can get a little confusing, so again, you want to consult your tax accountant. But again, if you're a married couple, you're exempt up to $500,000 in capital gains, as long as you lived in that house the last 2 out of the last 5 years. And if you're single, $250,000 in capital gains you're exempt from. I hope this video was helpful to you. I really appreciate you visiting our video blog. If you have any additional questions you'd like us to address in future video blogs, please let us know. And please feel free to give us a call if you have any questions regarding the value of your home, or if you need help purchasing a home. Our phone number here is 215-918-1920, or you can email us at scott@scottirvin.com. Thank you, and look forward to hearing from you soon.